We're going to look at inventory valuation. We're looking today at lower of cost or market. Inventory needs to be reported at market value when the market is lower than cost. This is defined as the current replacement cost and not the sales price. It can be applied in three ways: separately to each individual item, to major categories of assets, or to whole inventory. We're going to look at a couple examples today. Blake's Bikes has the following products in its ending inventory, along with the cost and market values. There are road bikes, 5 of these at a cost per unit of $1,000 and market per unit of $800. We have 4 mountain bikes at a cost per unit of $500 and market value per unit of $600. And we have 10 town bikes. Cost per unit is $400, market per unit is $450. So we're going to look at the values of each of these things. Let me add a couple of lines in here. Insert. And let's build out a little table to kind of look at these, determine which is lower, the cost or the market. So I'm going to write up here inventory item. We're going to put the number of units, cost per unit, market per unit, total cost, total market, and lower of cost or market total. Okay, so let's start with the road bikes. We have 5 units that we purchased at $1,000 each. Market per unit is $800. For our total cost, we're going to take the 5 units times the cost. The total market, I'm going to take the total units times the market. So which one's lower, total cost or total market for the road bikes? Well, the lower of cost or market for this one is going to be market. So we're going to put this total over here. Next up, we've got mountain bikes. For 4 units, we purchased them at $500 a piece, and market per unit is $600 a piece. Total cost, I'm going to take the 4 units times $500 a piece. For total market, I'm going to take the 4 units times $600 a piece. So which one's lower, our total cost or our total market? In this example, the total cost is going to be lower. And finally, we are going to put in our town bikes. 10 of those, we purchased at $400. Market is $450. Total cost is going to be the 10 units at $400 a unit. Total market is going to be 10 units at $450 per unit. So which one's lower, total cost or total market? In this example, total cost. So equals our total cost for that one. Add a couple more lines in here. All right, so for our total, we just need to add up the lower of cost and market total. This through this. And we also need to know our total cost. Yeah, I hear ya. My formula's wrong. There we go. This. Okay, so when we look at this, we have a total cost of $11,000. Lower of cost and market total is $10,000. So we have a difference here of total cost minus lower of cost and market, $1,000. So we need to do a journal entry for this $1,000. Here's what that's going to look like. We've got December 31st. We're going to debit cost of goods sold for $1,000. And we are going to credit merchandise inventory, $1,000. That's going to be us recording the adjustment for the merchandise inventory account. Let's look at another example. Auto Adrenaline. They provide specialty car products like super up-to-date satellite radios, GPS navigation systems, and you guessed it, subwoofers. At the end of the year, the company's records show the following amounts in ending inventory. We have 10 satellite radios at a cost per unit of 100 and market per unit of 120. We have 20 GPS navigators, cost per unit is 300, market per unit is 350. And we have 40 subwoofers. Cost per unit was 70. Market per unit is a whopping $50. So to determine our ending inventory with the lower of cost and market value, let's go ahead and build out that same table. Inventory items, number of units, cost per unit, market per unit, total cost. Let's add a couple here. Total market, lower cost or market items. Scan these a little so we can make sure we got all this detail. Okay, so satellite radio. We have 10 of these. $100 per unit. 120 is the market value. Total cost is going to equal 10 times 100. Total market is going to equal 10 times 120. So the lower of these two is going to be our total cost. Boom. All right, GPS navigators. 20 units. Oops, 300 a piece at the cost, 350 a piece at market. Total cost is the units. It's the cost per unit. Total market is the units times the market per unit. Which one's lower? Total cost. Last one is subwoofers. We have 40 of these. They cost 70 per unit. Market value is 50. It's total cost 40 times 70. Total market 40 times 50. Which one's lower in this case? The market. Let's total these up. Total costs. And lower of cost and market total. So we've got a difference here between our cost and our lower cost and market. And the total cost was $9,800. Lower cost and market is $9,000. So we're going to need to make a journal entry for total cost minus lower cost and market, $800. Here's that journal entry, December 31st. We're going to debit cost of goods sold for $800. We're going to credit merchandise inventory for $800.